The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, of course, the last several days, there has been a lot of talk about what is happening in the beef industry and comments from President Trump and USDA's beef plan that was rolled out this past Wednesday, and reaction from ranchers and more, and just looking at the markets overall and discussing supply and demand factors and so much more. There's a lot of layers to this. I want to dive into some of these and get some perspective from Charley Martinez, Assistant Professor of Agricultural and Resource Economics with the University of Tennessee. Charley, welcome back to the show. It's good to talk with you again, sir. Hope all's well.
Thanks for having me back. And I think we got plenty to talk about.
No doubt. And it's where do we start kind of a conversation, I think, Charley. Obviously, the comments and everything that's going on out there, the tweets, the Truth Socials, all the news headlines and more, it's having an effect on the markets. From a market perspective, I mean, what have you seen when you look at this and just the economics behind all of this? I mean, we're still at fairly record high levels or close to it, yet we're seeing that these markets are really moving off headlines and things of that nature right now, Charley.
Yeah, so I think if we parse it down to last week and this week, for instance, I think if you were marketing animals on Friday or Saturday, it probably wasn't fun, just because when the comments were made, if it was Friday afternoon or Saturday when you're marketing animals, prices repealed and decreased such that it was a lot of a talking point. But then as we worked our way into Monday and Tuesday, a lot of the prices, especially if you're thinking about the feeder or the futures markets in the fed cattle and the feeder side of things, those price decreases that we saw on Friday kind of clawed back their way each day, and from just a price standpoint, really recovered what it had lost, on the market on Friday and Friday afternoon. And then this week we had the True Social Post, and we saw markets sharply decrease and almost limit down across the board, across all contracts in the futures for live and feeder cattle. And as we sit here and talk right now, maybe the nearby live cattle futures has repealed or has gone back a little bit, called back some of what was lost. But the rest of the live contracts and even feeder contracts are still, trending downwards for the day. So I think we have two instances that the markets responded to comments, and I think that the response from a market fundamental standpoint, one is based off of trade, and then one is based off of, well, what does this mean for the future? So the first one, I think it was more of a reaction to Argentinian beef coming in, and I think people started thinking, well, hold on, Argentina doesn't really produce as much as let's say a Brazil. Do they really have the capacity to bring in enough beef to where it would really alter any of the prices? I think the short answer is no. They're 25% of what we are in terms of total beef production whenever you compare Argentina to the U.S. And so I don't think, just quadrupling imports from Argentina, I don't think really moves the needle in terms of a price altering amount that would come in. But then yesterday, or on Wednesday this week, the comments, I think it induces a little bit more uncertainty in terms of, well, what does the future look like? And then, of course, on Wednesday afternoon, we get the rollout plan from USDA of, hey, we're here to help the American producer, and here's how we're going to do that, and here's our plan in our roadmap. I think is just some little bit of hesitancy or uncertainty. And when we know what we do know also from a fundamental standpoint, when there's uncertainty or hesitancy, that's what causes either prices to stabilize or go down. And I think right now, just depending upon what contract you're looking at right now in the futures, that's kind of the reaction. I was actually on the phone with the producer this morning that actually marketed cattle yesterday on Wednesday, and they told me that prices really didn't change. So I think in the cash side, there's probably not as much blowback on prices, but in the futures, that's where we're seeing a lot of the price movements or the volatility really impacting prices.
And that's a great point you bring up. And I'm glad you did, because the cash market has been its own animal versus the futures market. And it's been that way for months on end. And I know one thing that a lot of folks have been tracking, and you talked about this, you wrote about this earlier in the month on Southern Ag Today, the beef cutout. I mean, that's another key piece of this as well, kind of maybe bridging the gap between futures and cash and what's going on out there in the countryside. But you look at the cutout, you look at what's going on with cash. I mean, that's to your point, it's a different conversation. And there's certain things that just aren't getting affected there despite all the volatility in futures, Charlie.
Yeah, I think one of the when we were looking at the cutout, like we know that there's some seasonality to the cutout, and we're kind of seeing a little bit of that to the point where some of the prices are down compared to where they were a month and a half, 2 months ago. But I mean, they're still really high prices compared to last year, the previous 5-year average. But for us, one of the most interesting components was when you look at the price changes over time over the last couple of months, especially since February, March timeframe by quality grade amongst the cutouts. We're seeing the spread increase between or the price difference between a prime cutout carcass versus a ungraded carcass really start to pull away from each other or increase. And to me, that's a signal of strong demand still for high quality products like a prime a prime carcass. Of course, we probably still get a little bit of supply impacts there, but when we start seeing ungraded kind of hold steady, but you see prime really start to increase, that means there's someone in the marketplace. There is an entity, or there is demand for that product, such that we see price increasing, and it's really kind of been on an upward trend since basically February, March timeframe. And that's, to me, it shows that we have strong demand for beef, one, which is I think what everyone would agree on. But even still, there is this quality differentiation still in the marketplace, such that demand is still strong, regardless if it's prime or if it's ungraded. And that's a good thing, right? I mean, that's a good quote unquote problem to have from a production standpoint, because we're playing with, or we're in a market right now where people are producing beef, or we have cattle that are really, really expensive. And so from that standpoint, it's still a good signal to see that there's strong demand, regardless if it's ungraded or if it's prime. Especially if you're a packer or a feeder, that's really good news still.
And I think about this, you mentioned that demand that remains good, and it comes back to just simple supply and demand fundamentals here, Charlie. I mean, it's no secret that our cow herd in the U.S. is at the lowest levels we've seen in decades. It's not going to be an overnight fix to rebuild it. Meantime, you still have that roaring hot demand, even at high prices. And so, I guess, again, I'll say it again. I mean, there's no overnight fix to what is going on here. And a lot of this just boils down to simple supply and demand.
Yeah, I think if there was a professor teaching economics 101 this year or the last couple of years in the beef industry, would be a really good example of supply and demand at work and markets at work. We've had a herd over the last couple of years that was liquidating because of various reasons. Majority of it was drought driven. At the beginning of it in 2019, when we really were at the bottom end of prices, cull cows you were happy if you got 35 to 40 cents a pound. And now, those cull cows are bringing $1.25. Well, you start thinking about, just total supply over time. Incrementally, we see it every quarter, a decrease in total supply, and we see this incremental increase of carcass weights going up. So we're offsetting some of the supply with increased weights. Well, then if we continue to follow that meat down to the retail case, every month this year we have set a new record in retail beef price. And whenever we finished last year in 2024, it was the best year in the last 25 years with regard to a demand or beef retail demand. And then every quarter this year so far, we've actually surpassed last year in terms of a demand index number. And it's crazy to think about that whenever we're setting record beef retail prices every month. And it's not just like they're incrementally growing by a penny or 2 pennies. I mean, they're 5 cents, 10 cents per pound. I mean, they're big chunks every month that's going up. And so if we see in retail prices continuing to increase every month, but we also see incrementally larger or increased demand index numbers for beef. That is, theoretically, there has to be a constraint, a budget constraint out there for the U.S. consumer. Where is that? I don't think we really truly know, because it seems to me, just like we were talking about the cutout, people often thought that if beef got really high, they would go to substitutes, whether it's pork or chicken. I think what we're starting to see is people are switching from their steaks that they were getting when they were a little cheaper now to probably buying a little bit fewer steaks but getting more ground beef, or going to cross-cut ribs, or going to fajitas, or going to other forms of beef. And so they're not switching without a beef, but they're switching within beef, which is driving some of those cutout values that we're seeing, and all-time high demand in terms of beef. And whenever you have really strong U.S. consumer beef demand and you have really low cattle supply numbers, that's what we're going to arrive at is prices increasing, because you have supply going down, which is a price increase maker, and then you have demand going up, which is also a price increase maker. And so we're kind of seeing that come to fruition. And like you said, simple supply and demand.
At the producer level here, Charlie, final kind of thoughts as we wrap up our conversation on this. I guess when you look at this from a purely economic perspective, and what you're hearing from ranchers and cow-calf operators, et cetera, I mean, what's the biggest thing you would emphasize to producers right now when they're dealing with all the noise and we're looking at the volatility in various areas? I mean, what's the biggest message that folks need to take home right now when they're just looking at their overall balance sheet, their risk management plan, et cetera? What would you say to folks?
Well, number one, risk management. I think this week in itself has had two instances where if you went to market animals, you were taking animals possibly to a market that had decreased prices within hours because of one, because of a social media post, or one because of an interview. And if you had no risk management and prices and your local market actually decreased like they probably did on Friday and Saturday, you left money on the table. And so there's nothing you can do in that instance right then and there, right? It's already done. But one thing we do know is that if you know that things can happen without warning, i.e. risk, do things that can help yourself. LRP, for instance, would be a really good tool for a producer to say, hey, you know what, I'll take a LRP that's 13 weeks out. I know I'm going to have cattle hit the market in the spring. There could be things that can happen between now and then, and I should probably go ahead and protect it. And right now, relatively speaking, it's a pretty cheap insurance policy. To cover 40 to 45 head might cost you anywhere between $1,700 to $2,200. That might seem a lot, but that's really essentially maybe one animal. You sacrifice one animal's worth of revenue, quote unquote, in order to protect all the rest of them. And if you think about it, one animal protecting the rest of them, and you don't lose more than you could lose anywhere between $2,500 to $3,000 or to $2,500 to $3,000 with a bad market move. And so risk protection, if you're not doing it, I would highly encourage it, because we're at these levels. 1% or a 10% decrease in price is a lot of money. And then the other thing is, this is a good time to start thinking about your borrowing capacity for next year. Think about your cost structure. Think about if you're going to need money, because if we're going to have any rebuilding, think about how you're going to rebuild. Are you going to buy bred females? Are you going to raise your own replacement females? Those in itself have revenue implications or cash flow implications in the coming years. So just think about strategically what's your game plan if you are going to rebuild. If you're not going to rebuild and you want to hold with what you got, and really take a look at your cost structure. Think about more people this year probably have some extra cash than they're normally used to. It's okay to pay your taxes. That means you made money. So don't be scared to pay your taxes, and try to think about ways to invest in your operation moving forward. So when we're in the next time frame of not so fun prices, and we're in a low price realm, what can you do now to help yourself then?
Great thoughts and insights, and definitely a conversation that is going to be ongoing for quite some time, I'm sure. But until next time, we'll wrap it up there. Assistant Professor, Agricultural and Resource Economics with the University of Tennessee, Charley Martinez. Thanks for joining us on the show. Really appreciate the time. We'll talk to you again soon.
Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.